It's tax season. Are you ready? If you're like me, a real estate professional that's busy selling houses and working with clients, this is something that gets put off, unfortunately. Stay tuned today. We're going to talk about what you can do to decrease your tax liability, keeping more money in your pocket at the end of the year. So, if you want to really be best prepared for tax season this year, I'm going to give you some things to consider to check out because there may be some really strong advantages on the table for you that you haven't been taking advantage of that can really reduce your tax liability this season. First, are you familiar with the Augusta Rule? So the Augusta Rule was a rule that was put in place it's based on the Masters tournament, Augusta, Georgia, put in place back years and years ago. And what it allowed was, it allowed the owners of homes in Augusta to rent their house out for 14 days during the Masters tournament, and they didn't have to pay any tax on that income. But that doesn't apply just to homeowners in Augusta, Georgia. It applies to small businesses. Me as an individual can rent my house out to my business for executive meetings, for client events. And what I can do is I can charge my company a cost to use my house, which I do, and then that's income to me, but I pay no tax on that income as an individual, yet my company gets an unbelievable expense to deduct from their income, and so I get that benefit of having that Augusta Rule expense deduction. Another thing, have you considered hiring your kids or pets? I mean, we don't have kids, but we have our 3 dogs, and they're our therapy dogs. They are involved in a lot of our video and other social media productions, and so we've hired our dogs. And that's maybe a gray area, but your kids you can hire if you put them to work, maybe introducing you before speaking events or family photos of a family-based realtor, and you can pay your kids up to $12,000 a year that they'll pay no taxes on, and again, you'll get a $12,000 expense per kid to reduce the income in your company and decrease your tax liability. Third, the qualified business income deduction. That's section 199A in the Internal Revenue Code, and it allows you to deduct up to 20% of your qualified business income, which just 20% off of your gross income reduces your tax liability by that amount, depending on whatever tax bracket you're in. Again, QBI, section 199A, something to check into to see if it might apply to you in your business. Again, investment properties. Do you have rentals? Have you cost segregated any of your rentals? Cost segregation is a way to accelerate depreciation shorter than the straight line depreciation that typical residential properties get. Certain components of the house can be accelerated, which allows you a bigger depreciation in a shorter amount of time, and that gives you a better tax benefit or decreases your income that you're paying taxes on in these early years of owning that rental property. And then the final thing today is the employee retention credit. Now, back in COVID, for those employers that kept people employed and didn't lay them off during those tough months, there was the PPP money, which was a loan to companies to help them pay for those employees, but much of that money, if not all of it, was forgiven. And there was this other tax benefit called the Employee Retention Credit, the ERC, that was not in addition to PPP originally, but became in addition to PPP. And so many employers or so many small businesses didn't realize it was in addition and didn't capitalize on the Employee Retention Credit. Well, there's still time. And so if you want to step in and capitalize on the Employee Retention Credit, that would be another way, if you kept people employed during COVID, to find some additional tax savings in this year. Hope this has been helpful. Taxes are a serious matter. There's a lot of ways to get more money in your pocket. One's to make more sales, one's to decrease your expenses, but how about just decreasing your tax liability? That is a way today that you can end up with more money in your bank and everybody lives happily ever after. Have a great day. Thanks for watching. I'm David Brownell. Be good.